Good morning. You're watching Business World Live. I'm Danie Laurel. It's 10 a.m. rather, this rainy Monday morning in Manila. We are about half an hour into the trading day. Let's go straight to our top story. The government needs to come up with a substantial stimulus package to cover the drastic drop in consumption that led to the massive economic plunge in the second quarter. ING senior economist Nikki Mapa said this is to quell a festering recession. The government expects full-year gross domestic output to contract by 5.5% this 2020 as a result of the pandemic. To address this, Marikina Representative Stella Kimbo, who chairs the House panel on economic stimulus, said the government must reverse the trend of declining consumption by providing financial aid to the sectors most in need. COVID-19 stimulus bills are still pending in Congress. That's as lawmakers finalize where to source additional funds. Meanwhile, government debt payments rose 42% in the first half from a year ago. The national government settled 547 billion pesos in debt in the first 6 months to June. This accounts for a little over half of the 1 trillion peso debt payment target this year. Amid all the uncertainty, the Department of Finance sees a steady and moderate recovery for the Philippines. Finance Chief Sonny Dominguez said economic rebound may push through in the third quarter, given that a partial opening among some businesses had started as early as the month of May. Now, more on the economic front, it's going to be a painful ride for the Philippines this year. That's according to Fitch Solutions. The debt watcher slashed its GDP outlook for the country to a contraction of as much as 10.8%. This comes as the economy plunged into a technical recession after a 16.5% contraction in the second quarter. Metro Manila and nearby provinces have been placed back under stricter lockdowns as COVID-19 cases swelled close to 130,000. Amid all this bad news, Central Bank Governor Ben Diokno said a downgrade in the country's credit rating would be unlikely. Diokno says the sharp second quarter drop will not do much. He noted the country's prudent fiscal standing, high tax efforts, low inflation, and strong peso as cushions to the impact of the pandemic. President Duterte is expected to address the public today after his meeting with the IATF. Metro Manila and some surrounding provinces are under MECQ category until August 18th. Let's open our terminal with me here. You can see on your screens that our local index is opening rather flattish. That's down by 2 points, down 0.03% in the first 30 minutes of trade. Still well below the 6,000 level. We're at 5844.02. Now, markets will be waiting with bated breath today on more clarity on what's going to happen. I did just say earlier on Philippine COVID cases rising 3,109 yesterday, just closing in on 130,000. We reported 2,270 deaths in total on Sunday. And on the back of all of this news, analysts expecting the stocks to further drop or move sideways. Now, recall, you can see on my screen here how we saw a very difficult past 5 weeks. That actually has this last week was actually the fifth straight week in decline. We were down by 1.4%. Another week in the red. That's on the back of Friday, also closing the 1%. Now, 2Trade Asia is saying that sessions last week were generally volatile during, of course, the entire week. You had the second quarter GDP coming out last week. You had, an economic contraction worse than anticipated, the steepest decline on record, officially plunging the Philippines into a recession. But you've also got the July inflation that came out, plus the MECQ reimposed on the capital until August 18th. That effect still being felt and digested by the markets. Apart from that, we had a flurry of all of these second quarter results. That, of course, were expected to be bleak, but still a lot of that that investors are looking at, according to 2Trade Asia, are the capex plans and how those have been shelved. There are a lot of projects have been shelved, and not just per se the earnings, which were expected to already be quite difficult. Now, Phil Stocks is also saying one important thing. They're saying that the tension between the United States and China may actually continue weighing on investor sentiment this week. Mike Ricafort, however, of RCBC says that he does believe the financial markets have already priced in the 16.5% year-on-year decline in the second quarter of GDP. Now you can take a look at my terminal here just to see which stocks are actually opening in the green and going against the flow. You're going to be seeing Alliance Global up by 3.9%, Metro Pacific as well. So a very mixed picture here. You've got conglomerates, you've got property companies, SM Prime, the big gun, up by 1.9%, Mega World as well, but just a very, very mixed picture on who are actually rallying. But it's very clear to see which ones are dragging down the index. You've got Semirara down by 6.4%, DMCI as well. Its parent company will be back with the news on that just in a minute. But I just wanted to show you guys how the net foreign selling had been on August 7, because that is a staggering. You can see that on my terminal, the rightmost block of red. That is a staggering 6.9 billion pesos net that we lost from our investors, foreign investors, the highest outflow or net outflow we've seen in 5 years. So since 2015. Now back on the SCC front, still the latest in earnings. You've got Semirara actually disclosing their second quarter net income. That's at 1 billion pesos, down 73%. That's on the back, and that actually brings the first half net income to 2.2 billion pesos, down 61%. Now, in fact, the decline was softer, let's say, if you can call it that, in the first half of the year, cushioned by 126% year-on-year improvement in energy generation of their Semcalaca power plant. But you've also got quarantine policies in force pulling down coal demand and just electricity sales. So they mentioned that there's been a historic dip in coal prices. Generally, global coal prices were also plunging. So not just here in the Philippines, the sharpest drop in 6 years in terms of coal prices. And even as energy sales increased by 22%, you've still got a decrease in spot market prices in April, which was actually staggering. And another very interesting thing here, and that's why I brought in Emperador into the mix. Emperador is now replacing Semirara in the Philippine Stock Index. That's effective August 17. That's according to the memo from the Philippine Stock Exchange. Emperador is also included in the industrial sector index. Waterfront Philippines, meanwhile, was removed from the services sector. And you can actually see Emperador in the red this morning, while SCC is suffering huge declines, largely possibly related to that. It will no longer be on the main board of the index. Now, one thing to watch out for is URC as well. I wanted to focus on that because analysts are, now commenting on how the earnings came out. They actually said that URC was one of the most actively traded stocks last week because of its stronger than expected second quarter. And this is according to China Bank Securities. They also mentioned that because of the reinstatement of the MECQ, they're seeing even further benefits to URC, given, of course, they are producing staple products. So the MECQ actually possibly aiding URC compared to a lot of other companies that are finding it a boon, bane to its income. Meanwhile, its net income attributable to equity holders, we had already reported that was up by 70% year-on-year, 3.5 billion pesos in the second quarter, and that had actually beat a lot of the estimates. Net profit in the first half of the year up by 7.7%, 5.53 billion. You can see URC still rallying this morning. That's up by 1.3%. I also want to talk about the property space this morning. You've got several that had actually released their earnings reports last week. That's last Friday, just after trading hours. You've got Philinvest Development second quarter net income. They've reported an upside, actually 38% to 4.2 billion pesos. FTC is not here, but you can actually see Philinvest Land jumping on that. That is, of course, the main beneficiary of the parent FTC. That is up by 2.3%. Ayala Land had actually also reported its first half net income on Friday. That is 4.5 billion pesos, down 70%. And they did mention that residential revenue in particular fell 54% to 20.5 billion pesos. First half sales reservation falling by close to the same amount, 50%. And their president, Bobby D, saying that while the company is seeing some positive signs, still expects the rest of 2020 to be rather challenging. You can see Ayala Land up, however, by 0.3% this morning. And finally, Robinson Sand. We're going to be waiting for more strands on that towards the day because they have just reported a second quarter net income of 520 million pesos. More on the property space later on with CLI CEO Jose Soberano III. Meanwhile, let's check in on the biggest headlines we are watching this Monday morning. The government raised a record 516.3 billion pesos. That's from the sale of retail treasury bonds, or the so-called Progreso bonds, despite the Philippine economy officially plunging into a recession amid the COVID-19 pandemic. The agency said they were able to raise this amount due to strong market liquidity and a boost in online sales. You can see on your screens here, National Treasurer Rosalia De Leon said 488.5 billion pesos in fresh funds or new money were raised via the 5-year RTBs, while 27.8 billion pesos were from switch subscriptions. De Leon said they saw a jump in online sales after launching the bonds.ph mobile application, where 80% of more than 2,500 transactions were done by retail clients investing 10,000 pesos or less. The mobile application had nearly 25,000 downloads from 85 countries. The bonds, sold in denominations of 5,000 pesos, carry a coupon of 2.6% and will be issued on Wednesday, August 12th. Proceeds of the fundraising activity will be used as additional funding for government response to COVID-hit sectors. Now, a measure that seeks to establish and regulate special purpose vehicles, or SPVs, to acquire banks' bad loans has now been filed at the Senate. This proposed Special Purpose Vehicle Act of 2020 aims to provide a legal framework for asset management companies for buying or investing in non-performing assets. Senate Pro Tempore Ralph Recto noted that this measure will improve the liquidity condition of banks and other financial institutions that may be unable to pay the bank loans due to economic uncertainty brought by the pandemic. Money supply growth, meanwhile, slowed in June. That's following the easing of quarantine measures and as funds went to other investment instruments. BSP data shows that domestic liquidity, or M3, expanded by 14.9% year-on-year in the month of June, slowing from the upward revised 16.7% pace in May. The slower June M3 figure ended 3 consecutive months of quicker expansion since March, which was mainly driven by demand for credit. The slump in foreign direct investments is seen to worsen in the coming months. That's as investors take into account the country's response to the pandemic and the steep contraction in the second quarter of this year. IIF Associate Economist Yuan Liu Hu tells Business World that the rate of COVID-19 infections as well as second quarter GDP nosedive will impact investor sentiment. FDI inflows in the first 4 months of the year slid by nearly $2 billion. Who noted that lower FDIs will have a negative impact on the government's infrastructure program. As it is, economic managers have already started cutting budget for infra projects to realign resources into the COVID-19 response. The Development Budget Coordination Committee approved and slashed this year's infrastructure program budget to 785 billion pesos. This is now lower by 200 billion pesos from the initial allocation set. Infrastructure budget for 2021 has also been reduced by 10 billion pesos to 1.12 trillion pesos. The budget department says estimated infrastructure spending for next year may still change. Economic managers have repeatedly said that the country will need to bank on infrastructure spending to pump activity back into the economy. Property giants have reported contracting growth and more pain ahead in 2020, but one investment player has managed to take advantage of the crisis. Here to share with us what they've got right, we have with us Cebu Landmasters' Chairman and CEO, Jose Soberano III. Good morning, sir, and welcome back.
Morning, Danie. Happy to be here.
Thank you, sir, and very good to see you looking very healthy and safe, sir. Let's talk about your press release right now, which is saying that the first half 2020 sales are up. This is reservation sales, up by 41.3% year-on-year 7.43 billion. We're still awaiting your first half results, your second quarter results. But just on the basis of this, parang too good to be true. How did this happen that the sales are actually jumping during this very, very difficult period?
It's basically home and residential condo sales. It's only telling us that the market is really in need for this accommodations to be around, especially becoming more pronounced because of the pandemic. They see the need rather than being cramped in limited dwelling places. And if they would have that opportunity and and have these affordable options, and that's really what is proven by the strong take up on the second quarter. Uh, this has been a blessing for many developers, and I think this will continue in the next months or so.
Sir, a lot of our viewers are probably wondering how the situation is in Vismin compared to Metro Manila, especially when we're talking about property projects, construction projects. You were saying in your report that it's, a lot of the areas you are in are low risk now, but it's actually Cebu was one of the hot spots. So why are people still buying property in Cebu, especially given this ECQ that was reimposed also in the city very recently?
Yeah, when they realize that the situation worsening, so they feel that the better way to address them is to have better security and safety and health, and that's going to be a part of making them have the opportunity to be in homes and communities that are a lot healthier, better surroundings. Now, in the case of Bismin, there are areas that are a lot more open. No? Even during the height of our lockdown in Cebu City, they continue to do a lot of these construction activities. Now, we are a hotspot, but recently, just last week, Cebu City was now upgraded to GCQ. And we have noticed that the cases, no, the COVID cases has really dropped and has
Okay.
been managed very well. So that's a very good sign for us here.
Okay, that's good to know and reassuring. We hope the same happens in the capital, which has not happened so far. Sir, you've already announced that some of your expansion projects and capex will be not necessarily shelved but delayed for a further period. Did the lockdowns actually affect any of your current projects and construction timeline?
Slightly, because there are those projects that we continued, no? Especially those that we have already started construction. And for example, in Cebu City, the local government here has allowed some minimal construction works. So this, instead of doing it 100%, which we cannot do, we managed to do only about 50, 60%. So this has
Okay.
affected to a certain extent. But in some other areas, like again, the Oro, Bacolod, Iloilo, things are more open and it continued as they are. So in our case, for those projects that we have already started, we continued, but with a slight slowdown overall. But we also had deferred some projects, especially projects that we have not started yet. And we continued with projects that are even on the retail and hospitality side, which will be completed within the next 3 years. And by then, I think things would be a lot more
Sana.
normal than we'll be having now.
Okay, so still banking on these projects after 3 years, sana. Sir,
Yeah.
what is your outlook on the Vismin region in terms of property prices? You have a report from Colliers, at least in Metro Manila, land values may actually drop by 5 to 15%. Is the regional province going to be seeing this type of steep decline as well? Are you, in a way, a bit insulated? Will you be benefiting from, some have said, for example, BPOs are now shifting to the provinces. You've got the Balik Probinsya program. To what extent are you going to be better off or worse off than the capital here?
We see things moving fairly stable in terms of pricing. No? And I think the challenge of most developers really is how to make things affordable for the market and the buyers. And that would mean having to incentivize the buyers or even locators and stretching certain terms. And that way, you still preserve the kind of prices that we are still enjoying or managing these days. So even if the BPO were to look at spaces, office spaces here in Cebu City, it's probably a plus or minus the 5% of what it was
Okay.
pre-COVID, no, in terms of rental rates.
Okay. Sir, you mentioned about stretching payment terms so that you don't take too much of a hit in terms of property price downfall. To what extent can property companies afford that? To waive rental fees from tenants in your commercial spaces to actually extend the payment terms. Is this something that will adversely affect your bottom line? Have you seen that already?
It's really how you are able to preserve your own liquidity position, no? And your balance sheet has a lot to do with that. Now, in the case of Cebu Landmasters, I think we have made very sure that we have all things calculated for us to afford certain incentives that we could give to the buyers. And these things will definitely augur well for not just the market, but even for us, no, that will still realize all of these sales and then be able to complete them because of the resources that has been tied up to the projects. So this is pretty much calculated in that sense.
Okay. Sir, loan growth, we reported it earlier before you came on the stream, is actually still slower than normal, despite the fact that the Bangko Central has already cut interest rates. It's at a record low. We've got triple R cuts. Are banks still hesitant for retail loans? Especially, they're very worried about bad loans. How is it? Are you feeling actually more liquidity, and are the residential buyers you're very focused on, even low cost affordable housing? Do these people have the access now to loans? And are you feeling that in the demand?
I think a lot of banks are still very supportive of consumer loans, especially when it's about housing. No? It's a social need, and even the government would like to encourage banks to support such projects, and we're happy with that. No, in the case of developers, we have to also see how different banks take a look at commercial loans in real estate. So it's a case to case basis as far as where they would like to go, but definitely in providing support to consumer loans and also for future homeowners, I think the support continues to be there.
Okay. Sir, what about the fact that remittances are also very low right now? It's at an all-time low. Expected to be more given displaced OFWs. This, of course, is a big chunk of your residential demand. What's your projection on that?
Are you referring to the OFW?
Remittances. Yes,
Yeah,
correct.
the OFW. Okay. Well, the remittances, if, we felt that the drop could go as much as 10%, no, year on year. But what we have also experienced in the first half, that the contribution of the OFW sales uh, dropped from what was usually 40% to about 20%. So the reliance on the OFW market was replaced by the local demand. That's
Mm,
why we experienced this 43% reservation sales in the second quarter. So it's a pretty
interesting.
pleasant surprise in the shift that the OFW may have dipped, but it was also taken over by the strong demand from the local market.
Okay, so good to know that despite that, there's actually still a huge demand. And you had mentioned in your report a backlog even of residential housing. Sir,
Right.
tell us about your projects that you are focusing on, your priority projects right now, and more about the Ming Mori reclamation in Cebu.
Well, it's still basically going to be home and residential sales for Cebu Landmasters. That's where the
Okay.
demand is. We expect that to be a major contributor, something like 90%. The rest are spread out on the hospitality and the retail and the rental revenues that we have been able to do. So the focus will remain to be there, but we continue with our mixed-use development, even our townships that are going through land development in the Davao Global Township that we have. And now that you mentioned about Migmori, we
Mm-hmm.
recently got this ECC approved by the DNR, and we hope by the completion of some more of these requirements that we could finally start reclaiming on that particular project by the middle of next year. That to us is a key project because it will contribute. It's an employment generator because it's predominantly industrial estate. So it's
Mm-hmm.
going to be a very good economic stimuli in a way for Cebu City or Bismin in general.
Okay, sir. So still actually banking on the commercial and industrial parks and buildings in the future. Sir, just last question before I let you go. You can see actually on my terminal here, Cebu Landmasters,
Mm.
one of two companies in the property space that's actually in the green. Year to date, you're coming out with your second quarter earnings. A lot are looking out for that and seeing whether you will beat their estimates. Give us a bit of a flavor there, sir.
Well, I'm just happy to note that pre-COVID, our stock price was really even below four, no, 4 pesos per share. Now we're hovering around 5 peso and above range, which is a pretty good development for us, considering that we had to face the second quarter storm. Now, yeah, we will be presenting the second quarter earnings in a few days. We will be disclosing that, but just to have a little flavor, yeah, there's a slight dip,
Okay.
but it's something that we have been pretty pleasantly surprised as well, considering
Hmm.
the slowdown that we have on the construction progress. But yet we are able to manage that, and it's not it's not something that we are worried about. We're in fact very happy with the
Okay.
developments because we look at the third and the fourth quarter to be our stronger quarters, which should definitely make us very optimistic that we could attain the targets or the guidance targets that we have set at the start of the year.
Okay, thank you so much for that outlook, sir. So a bit of a dip, but still better than expected, given the fact that it's been a very difficult period and looking forward to even better times in the third and fourth quarters. Thank you very much. That was, of course, CEO of Cebu Masters, Jose Soberano III.
Thank you.
Okay, guys, quick check on the global space before we end this broadcast. You can see on my terminal here just a very quick picture of how U.S. markets had performed on Friday. Very mixed bag here. Dow Jones and S&P in the green, but Nasdaq down by 0.9%. There's a lot of things going on that space. I had mentioned geopolitical risks still being watched by a lot of traders. In particular, you've got President Trump signing executive orders on economic relief there. So that's actually related to their temporary payroll tax deferral, some unemployment benefits, student loan relief. So again, more stimulus happening over in the US. But a lot of investors are weighing that against the fact that the US passed 5 million coronavirus infections already last month, and the fact that they have actually they will be reviewing this week the US-China trade pact. They've also are about to place sanctions on 11 Chinese officials and their allies in Hong Kong, including Chief Executive Carrie Lam, over the curtailing of political freedom over in Hong Kong. So a lot of things still to be watching out for there. Let's take a quick peek at how Hong Kong and China are actually doing on the back of that news. You can see that as of 10:15, Japan markets, by the way, are closed this morning. The Hang Seng down by 0.2%. China Composite and Shenzhen, again, a very mixed picture here. So, Asia doesn't really have a very clear direction as of this moment. We are, of course, take a very quick peek at our own local index, now swinging to gains. So again, we started off flattish. We were mostly towards the red. We've now gotten a bit above water, up 0.2%, 5855.49, but still a ways to go before we get back on our feet at that 6,000 critical level. Let's take a quick peek at our local currency. Just to close here, you're going to be seeing us actually weakening a touch. We're at 49 spot 046 to the greenback, but that's actually still a very strong showing. You can see that we are one of the strongest currencies. That was according to Central Bank Governor Ben Diokno, and the peso actually still hovering at 49 levels, saying he's saying that this is actually a very strong signal for the economy. So again, our local currency trading at 49 spot 046 to the greenback. And that's the first look into the business day. Today is Monday, August 10, 2020. Catch us again tomorrow morning, 10 a.m. I'm Danie Laurel, and we are One News.